As mentioned before, the company already calculated the opening balances in the consolidated statement of changes in equity. Therefore, the suggested approach was to start with these given equity opening balances as per the question and adjust with the correction of the errors. This approach will now be discussed. The first line item we will calculate is non-controlling interest. The calculation starts with the given opening balance amount as calculated by the client. This amount is incorrect as it includes the effect of errors. The first error made in the measurement of NCI relates to an at-acquisition measurement error. NCI in ordinary shares were measured at their proportionate share instead of fair value at acquisition date. Therefore, NCI's balance has to increase with the amount of the difference between the fair value and proportionate share. The fair value of NCI is higher than the proportionate share amount. Therefore, the given NCI opening balance has to increase with this difference. The next error relates to an error made on the amount attributed to NCI for the effect of an intra-group interest. Sphere Limited paid interest on a loan to Pyramid Limited of 33,000 Rand in the prior year. The prior year consolidation journal entry to eliminate the effect of this intra-group interest would have been debit finance income of P, credit finance cost of S, both through profit and loss. Both legs of this consolidation journal entry changes profit or loss items, and with the same amount. Therefore, this consolidation journal entry would not change the group's profit. Therefore, when calculating profit attributable to NCI, the profit of Sphere should not have been adjusted with the effect of this intra-group consolidation journal entry. However, the client ended up taking the profit of S, adding back the 33,000 times 35% when calculating profit attributable to NCI in the prior year. This should not have happened. This adjustment caused the profit of S attributable to NCI to be higher than what it should have been. Therefore, the opening balance of NCI includes this higher amount of profit attributable to NCI from the prior year that should not have been attributed to NCI. Therefore, NCI's opening balance should decrease as a result of the effect of this error. The next error relates to the non-cumulative preference shares. The client treated the non-cumulative preference shares as cumulative in the sense to opening balance period. S did not declare any preference dividend. The client, however, incorrectly attributed 120,000 of this since to opening balance retained earnings to the NCI preference shares. So what they did is they took the movement that you usually have to calculate. They deducted from that 120,000 representing 2 years preference dividend of 60,000 Rand per year. What's left got attributed to parent NCI at the 35% ordinary percentage. The same 120,000 that they've now excluded from that movement was attributed to parent NCI at the 15% preference share percentage. This gives you an amount of 18,000. This, however, should not have happened.